Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 17th of September. Now there's a growing sense that risk appetite is starting to stabilise once more. The last couple of weeks has been a bit corrective for risk assets. However, in the last few sessions we're starting to see a sense that stabilisation is returning. Equity markets are hovering, if maybe even forming support as well, and it'll be interesting to see if that continues. We had some really strong US retail sales data yesterday. Markets were risk positive, although the dollar was positive as well. Treasury yields were higher, the dollar higher, but risk appetite was also positive as well. Equity markets formed okay on the back of that data. The US dollar is giving back some of those gains today, and it'll be interesting to see because dollar has started to try and make a positive move in front of the FOMC, but I don't really see it happening. I think markets will start to consolidate once more in front of next Wednesday's crucial meeting. Now for today's session we've got the Michigan sentiment numbers. Now again, Michigan sentiment is expected to pick up after a sharp spike lower last month. Again, a sense of stabilisation there, and that could help to add that sense of stabilisation to risk appetite once more. So with regards to the charts we're looking out for today, well, we've got euro-dollar, because euro-dollar, as I said, the dollar strengthened yesterday. Euro-dollar broke through a key level of support, 118 big figure, and that really does now become a bit of a pivot line and a mid-range scenario. We've also got a similar looking picture on the gold chart as well, gold breaking below 1780. And finally, we're looking at equities with the NASDAQ 100 futures, because NASDAQ 100 futures certainly look to be strong still, one of the best performing indices around, and it looks like it's starting to pull higher again. So let's have a look at the charts. And onto the Infinox MT5 platform, we can start with euro-dollar, where the euro-dollar had this basis of support around 118 big figure. That was an old breakout and then became key basis of support over the past week or so, but that was decisively broken to the downside with a really strong negative candle actually. And that picked up from 1750. Now I've just got the crosshair at 1750, and you can see actually it coincides pretty much with a little bit of an old basis of support back from July and a little bit of a basis of resistance. So you could argue there's some support there, although I'd still say that breaking down so decisively with such a negative candle, also the RSI moving to well below 50, it just lends a negative bias. You're also below all the moving averages. So lending a negative bias to euro-dollar, which I still think is trading within this range really. And you could argue the negative bias within the range suggests sort of selling pressure will come in back around that 18 big figure. That old support becomes new resistance, and that would be the bias, I think, there to the downside. So maybe the risk is that selling any sort of rallies coming into that 118 big figure resistance. You've obviously got the reaction highs around 118.40, 118.50 now as resistance. But as I said again, 1750 is initial support. And if that can hold, then essentially that sort of neutralizes the outlook once more. But if that then breaks to the downside, I think we are certainly looking at sort of more towards the range lows once more. And you could argue a similar outlook really is on gold. We've got the big resistance of this, what essentially is a range now, at 1833, 1834. We had 1780, which had been holding as a basis of support for the last few weeks really, and then that broke decisively to the downside on a big strong candle. And the market rebounding a little bit today, but that old support of 1780, 1775 to 1780, you could argue, now becomes a basis of resistance, overhead supply on the near-term basis. So if the market fails to get back above that, then you really do start to look again once more with a negative bias. You've got the momentum, which is negative, confirming the breakdown below 1780 on the RSI here. And again, we got 1745 to 1750. That 1750 level was an old support back from June. And again, if that now breaks back underneath 1745, you really are looking corrective, I think, on gold. And I think that that could start to see that into the low 17s and maybe even 1600s. But just for now, we're on the rebound, and you're seeing the market sort of unwinding some of that oversold position, certainly on a near-term basis. And again, for on the 4-hour chart, 50 on the RSI is a key level to start looking out for. And again, that could well coincide if this rally does continue towards that resistance. That could be sort of selling opportunity zone there, territory. And finally, NASDAQ 100. I said earlier, I think NASDAQ is the best performing index around, or indices around, series of indices. So NASDAQ 100 futures, we've got pulling back into support. We've got the purple area here, 55-day moving average, basis of support for the big corrections. Also an old breakout level as well, around that 15,130, 15,140 area. And again, support around that old reaction low as well. So you've got a nice basis of support there. Last 2 days we've closed towards session highs. It's starting to threaten higher once more. You've got the unwind on the RSI looking strong. I think that this is an index certainly to look out for if playing long on the index front or indices. I think NASDAQ could be the one to go for. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Monday, where we'll be certainly looking towards that FOMC meeting. So I'll leave you with the Infinox support and resistance table, and I'll speak to you then. Have a good weekend, everyone.